Major funding for these programs is made possible by grants from Chase Commercial Term Lending, New York Community Bank, Capital One Bank, Perfect Building Maintenance, M&T Bank, Customers Bank, Genova Burns, Terra CRG, Meridian Capital Group, Wyckoff Organization. Additional support is made possible by AKA Hotels Corman Communities, Ariel Property Advisors, AmTrust Title, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Cushman & Wakefield, Dime Savings Bank of Williamsburg, Fisher Brothers, Flushing Bank, Friedman, Handler Real Estate Organization, HAP Investments, Hersha Hospitality, Hodges Ward Elliott, Inc., Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, New Banks, Newmark Grubb Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Stonehenge Partners, TD Bank, The Continuum Company, the Moynihan Group, and these friends.
So where are we? We're in July of 2016. We're off record numbers on investment sales, but we've had a little blip in the European economy in June. Where do we see investment market? Where do we see in general in the region? So today I've assembled this group of 4 investment professionals. Or should I say 3? I have Aaron over here. 4 investment professionals who will provide me their insight. My guests today include Aaron Youngrise, who is the chairman and CEO of Rosewood Realty, Vic Silozio, who is a partner at Ariel Property Partners, Dan Marks, who's a partner at Terra CRG, and last but not least, the chairman and CEO of Eastern Consolidated, Peter Habsburg. So you were saying before, the market is a little slow with the exception of the Bronx. The Yankees aren't playing that much better this season. And there are 2 soccer teams who play in the Bronx. Do you think it's because of that?
No. No, I think a lot of people who have been buying in Brooklyn and buying in the boroughs are going to the Bronx because multiples are lower, cap rates are higher, and the bank doesn't differentiate us to LTV. You could still get 65, 70% there, and you can actually eke out a return, so guys are going there.
I'm going to test the See, Peter, I only emphasize one thing of Eastern Consolidated, that he's also a co-founder of there, but he's also on the mortgage committee of M&T. How does a bank like M&T look at the Bronx?
As a new territory that's finally come into its own. I mean, I've been doing this for 35 years, and I've been hearing for 35 years that the Bronx is the next thing happening. You think it would be because it's between Manhattan and Westchester. It never did, but as Aaron said, all of a sudden, the last couple of years, things have changed and picked up, and the lenders are taking notice.
Mr. Brooklyn, Terra CRG, only Brooklyn, okay? Who I participated at a seminar a couple of months ago. How do you see the market the first 6 months of this year, and how do you see the potential and the effect of Europe on us?
Look, I think the market is dependent on the asset class that you're looking at, especially in Brooklyn. If you look at residential land sales, I think across the board, probably across New York City, they're way down. I think 421A plays a big part of that, and we'll probably talk about that later. Multifamily continues to do fairly well, but looking at sort of the first half stats from this time last year, we're about a $3 billion market, maybe a little bit more, where last year we were around $5 billion. And it's across all asset classes are down. Retail is probably the biggest asset class that's down. And I think by the end of the year, we'll see residential development be down as well. But let's not forget, 2014, we were right at these same levels, and 2014 was a record year. The Brooklyn market was a $1 billion market in 2010. The fact that we're at $3 billion halfway through this year still shows a lot of strength.
I mean, it's still strong. How are investors, looking at the land market? Because investors from Europe and around have local partners, as I think we said. They have local partners or they have local experts that they talk to with regard to the market. And they're all aware that we don't have this tax abatement, the 421A. And we're also looking at different things. How do you see because your perspective is not only Brooklyn, the entire market like everyone else, how do you see the land market in general?
It's been a tale of two markets since the end of last year, because the end of 421A meant that anyone with a rental piece of property couldn't build anymore. And then you have the softening in the condo market, which has also affected those prices. Typically, the condo market didn't rely on 421A, but we've had two things that have come together to pretty much put a brake on some land.
Vic?
I agree that land market has changed significantly. I mean, and you're seeing a buyer pool that has shrunk, and in areas like the Bronx, or in all areas, it's very difficult, almost impossible to pencil out on the rental underwriting, which is the fallback scenario that a lot of these lenders were basing their underwriting off of. In the Bronx, you can still build affordable. You have to take alternative tax benefits like an Article 11 shelter rent tax, which is much more cumbersome, much more restrictive. But what we are seeing, and I think to Peter's point earlier, is that there are still some sites, there's some equity slugs out there that will still chase the premium sites.
I think something that Peter's organization recently did, which was an alternative site, was this great site on 56th Street and Lexington Avenue over here where Hines and a REIT made a decision that there was a need, there's a lack, with the aging population, there was a need for an assisted living. So
yeah, it surprised us. There was a crowd of condo developers, and we assumed that would be the buyer, over $1,000 a foot. And then Hines and Welltower came in, and they had been planning this kind of entry into Manhattan for a long time because of the shortage of high-end assisted living. And they topped everyone at well over $1,000 a foot, and they're going to build the first new assisted living project in New York in probably decades.
we were talking about student housing. There have been a number of student housing developers who have been building. I believe there's, Pace has been increasing their space. The Delphi has, NYU and all there's a dire need for that. Mm-hmm. How do you see that market?
I see it growing. We're actually doing a couple of deals where guys are buying buildings and putting in students. I don't know if everyone knows, there are about 900,000 students living in New York, which is an unbelievable number. And it's an underserved market. A lot of other states have student housing buildings, and some guys in New York are actually taking advantage of that because it's all about how many beds you could fit into an apartment. And if you could fit 6 beds or 2 bedrooms, people will opt for the 6 beds. They'll get a higher rent.
With regard to that, I think it's Stanley Chiro, or the Chiros, another family who took one of the office buildings on Fulton Street, kept retail downstairs, and built apartments, student housing apartments over there.
Yeah, I think we are talking to some people who are looking for student housing. They actually have been for the last few years. There's a tremendous number of students, as Aaron referred to, in New York City, but in Brooklyn alone. They kept losing opportunities because the residential developers were just so much more aggressive on their underwriting, whether it was rental or condo. And I think now is an opportunity for them to take advantage of the sort of depressed development market to be able to win a couple of these opportunities. But there just aren't that many. We're still waiting for sort of sellers' expectations to adjust to this new reality. And if 421 comes back, or when something like it comes back, I think it's going to change the market dramatically.
The fundamentals are really healthy, because if you look at the census data, we have 375,000 people moved into New York from 2010 to 15, which is the sharpest spike since the 1920s. We added 250,000 jobs in 2014 and 2015, which is the first back-to-back years of 200,000 jobs since the 1950s when they started taking records. So New York is healthy, and there's plenty of people, and a lot of them students are in here, and that's probably responsible for a lot of this rental growth.
I think, right now there's the short-term effect, with Treasury bills and other questions, on the EU, leaving the EU over there. But the question is, have more investors come to you recently from foreign nations, okay, besides Europe, the Middle East, and other places? I think we were talking about Mexico and other things, coming to New York saying it is a safe haven to be over there, and they're looking at it.
Yes, I mean, it's starting to happen now. I mean, it's been happening for a long time. I mean, New York has always been considered a safe haven for capital. I think what's happened recently has amplified New York's standing as that safe haven for capital. As you mentioned, a lot of times they do lean on local operators and their local expertise and their execution strategy to optimize units. But recently, we have a few portfolios that are multifamily but predominantly free market, destabilized, and those seem to be more attractive to the foreign capital when they don't have to deal with the nuances of rent stabilization. They don't need to worry about overcharge exposure and things like this. A little easier management, that seems to be a little more lucrative to them.
What about the hospitality today? Because 60 million visitors fuel the hospitality business. There's no question about that. But the hospitality, because there are a large number of hotels under various stages of construction, and no one could negate the Airbnb, even though there's legislation saying that they can't do it, and but people are still using the Airbnb. Have you seen the hospitality sector where you either for development sites, because it's a different world anyway, on tax structure, on the uses, it's a manufacturing, a commercial, or in general? I know your office recently took care of the financing of a hotel. Where do you see hospitality in this market?
Oh, anecdotally, I mean, they're saying that there's an oversupply. Certainly, the construction lending for new hotels has almost disappeared. So I think we're going to see in the next year or two whether they do get absorbed. But Airbnb is definitely a factor in the future of the plans of these guys.
Yeah, in Brooklyn, when an M-zone development site would hit the market 3 years ago, hotel developers were almost always towards the top of the bidding for those sites. There's so few pockets where you can actually build hotel in Brooklyn, and so they were going after these areas aggressively. Look around the Morgan L, for example. I think there's 5 hotels permits that were pulled there in the last couple of years. Now, none of them have actually started development.
But what about Williamsburg? I mean, you have 3 or 4 new hotels in the Williamsburg section.
Right.
The William Vale is opening any day, and then there's another one on Metropolitan Avenue.
Right. Time will tell. Like the Wythe was a good test for that market, and they do extremely, extremely well. My expectation is that William Vale will do well also, being so close to that and all the amenities that are in that area and the tourists that are continuing to flock to Williamsburg. I think that hotels can do really well positioned in the right neighborhoods in Brooklyn.
What's happening in Queens?
We are doing a lot of deals in Queens this year. We're actually having higher prices than last year. We're doing some deals that we're getting north of 20 multiples, which are Manhattan prices. We're doing a lot in Sunnyside and Woodside. It's expanding from Manhattan outwards. Astoria, Long Island City, Sunnyside, Woodside, Flushing. Queens is very hot. There's not a lot of product there, but when it's available, it gets scooped up literally in days.
Now, since I know you live in Long Island, is there any investment sales taking place in Long Island? And then we're going to go to the Westchester person.
There is a little. We've been doing a couple of unsold share deals in Long Island, but the taxes are so high, and that's a big problem.
Westchester?
Westchester, we used to have an office there 25 years ago and closed it because there just wasn't enough trading activity. It sort of is, it's the case that the families who own there own for generations, and it's just not the trading mentality that exists in the city.
You do a lot in Washington Heights and Harlem and so on. How do you see that market? Because it was strong, then it got weak, and it's strong again.
So based on the first half of the year, Northern Manhattan is the only market that's actually increased in terms of dollar volume compared to the last half of last year or the first half of 2015. That looks like it's going to continue for the rest of the year. There's some large transactions that are slated to close relatively soon. The market's, it's a great opportunity for a lot of value-add operators. There's still a large degree of rent stabilization in Northern Manhattan, so it does take a tolerance of this type of product, but there still seems to be a lot of appetite, especially if you look at the transactions that accounted for that increase in dollar volume in the first half. a lot of $20 to $40 million transactions, a lot of $50 to $100 million transactions, and even a few that are above 300.
People sometimes, when discussing New York City, we forget that there is a fifth borough. It's called Staten Island. They have the pilings in for this 540-foot wheel. They have, a new shopping center, an outlet center that they're planning. Is there any activity? Have you seen activity both on your investment sales, retail, and capital markets in Staten Island?
We do 2 or 3 trades there a year. We have a shopping center there on the market every year, but it tends to be its own sort of insular group of investors that trade there.
Last year, we sold one deal in Staten Island that was about a $20 million deal, a garden-style complex. At the end of the year, I think the Real Deal was doing their rankings. They called us up and said, hey, you're number 2 broker. Probably to Aaron, probably who was number 1. But we were number 2 broker
Wait a
from one
second,
transaction.
Do you know Staten Island?
I do, but it's very few transactions.
Okay. Let's go to another market that I would like to bring up. The China Construction Company has a major development, and I just found out that there's a deed restriction on it, that the Lefrak sold them a property in the Newport area of Jersey City where they're building a condo. And the reason that they have to build a condo is because Lefrak said you can't build a rental because we have all the rentals over there. So the China Construction Company is there. Other companies are there. What you seeing anything? We'll get back to you in Brooklyn because you're not allowed to. But are we seeing anything in Jersey City? The activity, you could see as many cranes in Jersey City. I was there about a week and a half ago. I got off at Exchange Place on the path, and I was petrified by the number of construction. Any activity for you?
Yeah, a bunch of the New York guys have gone over there and have found it to be a
Right.
really
Lloyd
heavy.
Goldman has gone there.
Lloyd is over there
Yeah,
with
Richard
building
Mack,
it's
right.
fully rented. A lot of demand and a great future there.
And what's amazing is there are actually guys who I've spoken to, young guys, who were living in Manhattan and have moved to Jersey City and love it.
There's a 40% change in rent, okay? Even for the most magnificent new building in Jersey City, the highest rent is probably $50. And that same type of rent, if they went to downtown Manhattan, would be $85 to $90 a foot. And, if you get on the path, it's a 10-minute ride. That's all it is, and then you have the ferries over there. There are a couple of people that I remember who had sites in Brooklyn a couple of years ago who said, I'll hold off and I'll wait because the market's going to go up and up and up and up. I know specifically 1 or 2 nonprofits or unions or other people involved in that category. What's happening to the development site business in Brooklyn?
Look, there's a lot of buildings in construction right now. There's a lot of units coming online in the next 6 to 12 months. 3,000 to 3,000 or so just in the downtown area alone. And so we're going to find out how quickly these units can get absorbed or what sort of rents they're going to get absorbed at. New development has stopped. Construction lending has basically frozen. The psychology of the market because of the 421A expiring has really sort of shaken people's foundation to some extent. And we're just not seeing a lot of new development sites hit the market. And when new development sites do hit the market, where we used to get a dozen offers in the first week or two, maybe now we're happy to get a handful of offers within the first month.
Right. Peter, you were talking about you had a site on the Upper West Side in a similar situation.
Yeah, different location. A terrific.
No. Great location, but the number of offers.
Oh, the number of bidders is
The bidders are
1/3 of what would have been there last year.
So here's a question that we were alluding to before we started the show today. We were talking about how many sales are been created by the tax law known as the like-kind exchange or the 1031s. All of you are active in this business. How much of that business is predicated on the volume each year or this year that you see?
If I had to guess, I'd say 25% of our sales, or maybe a little more, are 1031 driven. People just don't want to pay that 35% tax rate, and they will pay 10, 15, 20, 25% more for a piece of property to avoid that.
So they're paying a higher premium, Aaron?
I would agree with Peter. I think more significantly, though, I think that's what's keeping the market where it is. Because a seller holds out, he doesn't get his price, and a 1031 buyer comes in, gives him the number, and that keeps that high watermark. So I think it's probably about 25% too, but it really strengthens the whole market as a whole.
Vic?
You look, it's a question of motivation. In a lot of cases, that's the exact motivation that these buyers need to pay the type of price that the seller needs in order to transact. So I agree with both Peter and Aaron that it accounts for a large portion of the transactions that are happening, the buyers that are securing these deals, and it is propping up, I think, the market a little bit.
Over the past couple of years, one of the largest buyers, specifically in the office market, was the Norges pension plan, which is Norges over there. Needless to say, Brookfield and other Canadians have been also large investors in the pool, and then you have the sovereign wealth funds and other. Who do you are we seeing any new investors? I mean, we saw the Oleon boys buy the Sony building recently, for $1.4 billion. Are we seeing other investors from different parts of the world, flight to quality, like South American people, looking around in the tri-state area?
Yes, we are. We actually are doing a deal with Argentinian investors. Other South American guys, still Middle Eastern investors are active. I have not been doing as many deals with Chinese buyers as we did in 2015, though, that I did notice.
Peter?
Yeah, I would say we've seen a drop-off in the Chinese activity as well. But, there's a constant flow of new foreign money that comes to this
What do you
market.
attribute the reduction in the Chinese? Because of the yen, because of the balance of trade, or just in general?
It's probably due to more domestic developments in China than it is here. I think we saw the peak investment already. And EB5, of course, has been a huge factor, but even that's sort of starting to taper off.
Speaking of EB5, I know a number of projects in Brooklyn have been at EB5. I know Jersey City is heavily EB5. Where have you been involved with any EB5 transactions?
Just in the fact that some of the sites that we've sold in the last year or so certainly have had a large degree of EB5 financing.
Question about retail today. Everybody is worried that foreign investors, foreign individuals will be not traveling here as much because of the devaluation of the pound, coupled with the fact that e-commerce is definitely having an effect on bricks and mortar retailers. Macy's is closing stores, other people are closing stores. How do you see the investment sales market on retail today?
Well, there's no doubt if we talk to the retail leasing folks that the rents are definitely starting to soften. Landlords are giving more concessions, and my guess is, is that cap rates will start to rise on retail when people realize they're not going to go up and up and up as they have every year.
Madison Avenue and Soho have both seen a definite softening over there. And as I said on an earlier show, the meatpacking district, if you go there at night, it's fine. But if you go there during the day, the retailers aren't there, the people aren't there. It's not an active market, and you just can't be in that situation. With regard to that, we've seen, in one of the areas that your group has really grown in is the restaurant business, a lot of retail leasing in restaurants. How do you see that growing today?
Well, Ninth Avenue in particular is a great example of how it's completely transformed into something that's like Restaurant Row. But, I remember an investor, a well-known guy in the 1980s telling me, you got to buy retail in Manhattan because they're just not making more of it. But the buildings go up, the population goes up, but the streets don't get wider. And I think if you look at retail over time, you'll see that upward trend.
Retail in downtown Brooklyn has grown by leaps and bounds.
Right. City Point is obviously an important project that's coming online now. Everything along the Fulton Mall is in very high demand. Retail trades sort of year over year are down, but the appetite is still very strong for these assets. Brooklyn has traditionally been very under-retailed. Everyone's talked about it being the most populous borough with the least amount of retail. And so our expectation is that the demand will still stay high, and there's just not a lot of transactions happening.
What about retail in the boroughs? Have you been selling much retail?
Shockingly, we are selling something in Staten Island, a retail deal right now.
Is it a strip or?
It's a freestanding Duane Reade. and we are selling a couple of retail deals in Queens, and a couple in Brooklyn.
But
So mostly triple net deals, though. 1031
so the
buyers.
1031s.
Yes.
Now, with regard to retail in Harlem, okay, Harlem, USA continues to be a great property over there. A number of the sites on 125th Street, Jeff Sutton's opening up. You're going to have some other markets over there. The Pathmark is closed, so we don't know what Barnett's going to do. But directly across the street, what's his name?
Blumenfeld.
Blumenfeld Development is putting up residential, and there are other markets. Do you see more people looking for retail over there?
It seems to me that the high-end retail seems to be suffering a little bit, but the workforce housing locations like Harlem or Bronx, Staten Island, like Aaron mentioned, those seem to be attracting new interest from the same retail investors that were interested in the high-end retail markets. And you can make the argument that these type of locations have less exposure.
And I think, in general, even though people are a little cautious, I think, the questions of the 421A, the questions of what's going on, but it looks like the investment sales market is still vibrant, okay? Because you can't live at euphoria for each year, and the things will continue to do well. And I'd like to thank Aaron, Vic, Dan, and Peter, and I'll see you next week.